This video is sponsored by Fineco Bank, a multi-award-winning trading and investing platform. With 2022 now drawing to a close, all eyes are now looking to 2023. And with investors facing one of the most difficult investing environments in decades, including high inflation, ever-increasing interest rates, and a recession looming, it can be difficult for investors to know what to do. And so in this video, we'll be taking a look at arguably the world's greatest investor, Warren Buffett, and seeing how is Mr. B investing for 2023, and including what is the famous Buffett indicator saying right now. Then we'll take a look at Buffett's portfolio to see how is he positioning himself for 2023. And then we'll highlight any key insights and takeaways. As always, if you do enjoy anything in the video, then drop a like. Always appreciated. Okay, first up, let's start with the big picture view of the investing environment, and we'll see what is the famous Buffett indicator saying right now. With 2022 being a very turbulent year for investors, it becomes even more important to build your investment portfolio on a solid platform. Well, good news for everybody in either UK or Europe, there is a very good option with Fineco Bank. Named one of the world's best banks by Forbes, Fineco is a multi-award-winning trading and investing platform and bank. And here are 3 things I like about Fineco. Number 1, the stocks and shares ISA for tax-free investing comes with very low fees, especially the annual platform fee. Number 2, investing on thousands of UK, US and international shares without the currency conversion costs. And then number 3, your money is protected. The amount depends on where you live, but in the UK, it's £85,000. And open an account before December 31st and you'll get £500 worth of trading commission to use in your first 3 months. So, starting things off with the Buffett indicator, and named so, as Warren Buffett said, it's probably the single best indicator to know where we are with stock valuations. And basically it adds up the value of the US stock market and it divides it by GDP, so the output of the country. And then it kicks out a percentage. And here you can see it goes back to 1950 and we get this nice historical trend line going through the middle, and we get these overvaluations, undervaluations, where things are overbought and oversold. So what conclusions can we draw? Well, first thing to point out is that the highest that it seems to go in the last 50 years is this 2 standard deviation line. And once it had broken that, you can see there was a significant decline over the next decade and almost went to 2 standard deviations below. Then we have the infamous .com crash, and again it had just broken above this 2 standard deviation line, and this time came all the way down close to 1 standard deviation below before recovering, and then we went into the great financial crisis, taking us down a lot lower. Now, we've had this epic run starting 2010, which brought us all the way back up to 2 standard deviations above, and we have had a big correction into bear market territory, but we're still sitting around this 1 standard deviation line. So it certainly hasn't corrected back to the historical or anything below. So for me, this stays that next year we definitely need to proceed with caution, as there's a very good chance markets could take another leg lower, especially with what's going on with the interest rate hikes. So let's just take a quick look at that. So as you'll know, the Fed and Jerome Powell has been aggressively increasing the Fed funds rate. And if you look back to 2019, it looks like a very aggressive hike. However, if we scroll out and look at the past 50 years, then where we're at today is actually historically not that high. In the past 50 years, it's been a lot higher. It's just that from 2010, investors have been treated to this long period of very, very low rates and cheap borrowing that now it looks quite high. Having said that, this shows the rate hike cycle for 1983, 88, 94, 99, 2004, 15 and 22. And what you'll notice here is that it's the most aggressive rate hike cycle out of all of these time periods. And most of it has come in just the last 6 months. So this says to me the first half of 2023 is going to be very turbulent, and quite likely we will see the markets falling even further, as it does take time for these rate hikes to get into the economy. Moving on to Warren Buffett's portfolio, and here is how it looks right now. So currently valued just under 300 billion, and it's made up of 49 positions. Now, if we just looked at this, it looks like Apple is a significant portion. However, the more pieces to someone's investment portfolio, the better picture we get. So I always go away and we can grab Buffett's cash position as well. And when we add in the cash, you can see it's just as big as his Apple position. So one of the key points is that he keeps and holds a strong cash position in times of uncertainty. Second point to note is that although his portfolio is made up of almost 50 positions, the vast majority is just held in 7 positions. So he's a big fan of holding a lot less stuff, but higher quality. And the third point is a mistake I think many new investors would make. They would take a look at Buffett's portfolio and they'd probably try and copy. And they'd look at Bank of America or Coca-Cola, American Express, and just buy them at today's prices. But the big mistake is that many of these were bought many, many years ago, and in fact, even decades ago. So it's more important to look at what he's been buying recently. Now, let's just take an example like Coca-Cola. Before you run out and buy Coca-Cola, take a look at this. So this is the stock price of Coca-Cola. Going back all the way to 1983. And where do you think Warren Buffett made a significant investment? It was all the way back in 1988. And from there, he's made a cool 2,333% return. So buying at these prices, very different to these prices. So what he's recently been buying is a lot more important than what he holds. So what has Warren Buffett been buying over the past year? Well, he's been significantly increasing his investments in energy stocks. One of the major ones being Occidental Petroleum, and this is how Occidental has done this year. As the world's been crashing, Occidental is up still almost 90%. And the second one is Chevron. And again, when everything's been crashing down, Chevron is up 45%. And you'll notice they are now in his top 7. We have Chevron here and Occidental. So those are the two that are the big changes over the past year. And finally, this just highlights what he's doing with his cash position. So all the way to 2020, 2021, he was holding a record amount of cash. And you'll notice when all the panic selling was going on, Warren Buffett made significant investments. So he did spend a big chunk of his cash position in 2022. He was a buyer, living up to his famous quote, "Be greedy when others are fearful." So, after analysing Warren Buffett's portfolio, what conclusions can we draw? Well, here are 5. Number 1, he likes and continues to keep a strong cash position, obviously to take advantage of any crashes and low prices. Number 2, in 2022, when everything was crashing, Buffett was a buyer. Notice he didn't do any panic selling. Number 3, for most people, it's more important to take a look at what he's recently been buying and not necessarily what he's currently holding, as you make the money when you buy. Number 4, the biggest investments he has been making over the past year is in the energy sector, being Chevron and Occidental Petroleum. And number 5, he really does like dividend-paying stocks. And this way, he continues to have a strong income, especially in a recession, which also then fuels his big cash position. So, there you are, guys. Hope you enjoyed. Tell me, what do you think about Warren Buffett's strategy? Let me know below. But for now, just to say, if you did enjoy anything in the video, then drop a like. And a big thank you to everyone who does. If you do live in Europe or UK, then check out Fineco, as it is a solid investment platform for your consideration. And I'll see you in the next video. Bye for now.